Hey, what's going on, you guys? I want to welcome you back to my channel. And in this video, I got a really good strategy for you guys. It's called a bank consolidation strategy that allows you to ride the coattails of the banks and be profitable. All right, let's go ahead and get into it.
First we strategize, then we capitalize on what we see. Wanna go to Pittville? Come join the Pip Academy and learn the Pip drill. Let's take the trip to Pittville.
So in this particular strategy, like I said, this is actually going to be a bank consolidation strategy. Now, one of the things I want you guys to understand, us as retail traders, we don't have enough capital to actually move the market. The banks, hedge funds, they are the market movers. They are the ones that move the market. But unlike us, banks can't just place trades randomly because they're dealing with millions and millions of dollars in the orders and things like that they place. So basically what the banks do, they do a form of manipulation to take our money. And so we have to be mindful of these bank moves in order to ride the bank's coattails in order to be profitable. So for example, let's just say in the market, we started to see consolidation, equal highs, equal lows, things like that. Now, us as retail traders, one of the things that we might see right off the bat, we might see double bottoms or double tops, so to speak. You know, we might see, just depending on how you're actually looking at the market and where price is at that particular time, we might see here, we might see a double top. And so we might say, okay, when price decides to retest in this area here, then I'll go ahead and place a sell right here. We might place a sell limit or something like that. We'll call this a sell limit. We'll say something like, I'll put my stop loss right above this area to make sure I'm protected, right in this area right here. However, if we're looking at this as a, double bottom, so to speak, then we might say, you know what? I'm going to place a buy limit in this area. That way, if price come down to that area, it'll weak me in. I'll place my stop loss right below this level. That way I'm good to go. Then from another perspective, you might see some traders that say, okay, if this thing bounce, give me a retest, or if it breaks this area and close, I'm going to take a buy stop. You might have some guys that say they want to do a buy stop. All right, I'm gonna go ahead and put my stop loss up a little bit in this area here. And then they might say, well, my buy stop, I'm gonna put my stop loss under this area here. You might get some other traders to say, okay, if it break this area down here, I'm gonna put a sell stop. Okay, put my stop loss right in this area here. So now banks, they can see all of the order books. They can see all of these orders that's being placed and things like that. And one of the things that they can see is all of this money that's building up here. They see all of your orders. They see all of this liquidity that's building up, all in this area. Okay, they can see all of that. So what the banks will do, they'll hit you guys with a move like this. They'll come down initially to break the consolidation. Take all of this money right here. This is the initial move right here. Then they'll shoot the market all the way up here. Okay? Taking out all of this money. So this has killed the sell stops. This has killed the buy stops. This has killed all of this here. So all of this money has been just taken away. Okay? Now, when this move happens, more times than not, there's usually a demand level candle. Let's change the color of this to a red. Will symbolize bearish. There's usually a demand level candle in this area here, right in this first initial move. Okay? And this happens more times than not from a consolidation. When you see this type of move, there's a demand level candle that happens right here. And what the banks will do to fulfill their orders, they'll come down to this demand level, fulfill their orders, and then they'll go back up to equal highs or equal lows, depending on which way or the direction of the market, things like that. So what we can do to ride the bank's coattails is we can place an entry right at this candle, this demand level candle, bank candle, whichever one you want to call it. Stop loss can be at the body or the wicks or below this candle. TP at equal highs or equal lows, depending on which way you're going. Okay, so you can set your orders like this to actually ride the bank coattails. So in this particular example, it's 5 moves that happens. You have number 1, you have consolidation. The second move is going to be the fake out. Number 3 is going to be the breakout. Number 4 is going to be your retest, supply or demand entry. And number 5 is going to be equal highs or equal lows for TP. Okay? So those are the 5 moves that we want to see. Whenever we see this particular move or something like that, first we want to identify consolidation. Once the consolidation breaks, and what we can do, we can set alerts on these consolidation lines here. We can set alerts. That way we can see the initial fake out. Number 2, that's the fake out. Number 3, we have a breakout. And then we have that retest supply and demand entry that comes back for that candle there. Okay. Then for our TPs, we want to look for equal highs or equal lows. All right. So let's go ahead and look at the charts and let's see how we can identify this on the charts. All right, you guys. So we're here on gold on the 30-minute. And so first step it says is to identify consolidation. So right now we can see that the market is consolidating. And then what we want to see is we want to see a fake out to break either the short-term low or the short-term high of this consolidation. Okay. And so we want to see a clear, concise breakout. Okay. That was a little small wick that wasn't necessarily considered as our fake out. There we go. Okay. There's our fake out. So that's number 2. Okay. Number 3, we want to see a breakout. We want to see a break of this short-term high here. Okay. So let's move this over a little bit. Price is going, price is going. Right there. Okay. There we go. There's our breakout. So we had our fake out, our breakout. Now we have to identify our supply and demand bank candle, okay, which is the last candle before the up move. So if we notice down here, we have this candle right down here. If you guys notice, I'll go ahead and identify that candle. This last candle right here before the up move, okay? This is our bank candle, our demand candle, however you want to call it. Okay, and so one of the things we want to see is price to come down with this area, and from here we can actually set our buy limit. Price can either be at the bottom of this candle or we can do it a little pips below, however you want to do it. And then we want to target equal highs somewhere in this area here, equal highs in this area. We don't want to go too far, so we want to make sure that we capture equal highs. Okay, so let's let price play out and see what it's going to do. Price comes down, wick us in, right to TP. Okay, and you guys, this happens over and over and over in the market again. Let's look at another. So we're on AUD USD, and if we check this one out, we notice that we got some consolidation. Price wicked above this area here. However, we didn't have any candle closures above this area. So in this area, we get our fake out, we get our breakout, our retest on our supply and demand entry, and then from there we go up to equal highs in this area here. Okay, let's check out one more. All right, you guys, so we're on NZD-JPY on a 15-minute time frame. As you guys can see, we had a bit of a consolidation. We got some wicks to the downside. However, we didn't get any candle closures below. Then from here, we got a fake out, we got a breakout, we got a retest for our supply and demand entry right here on our bank candle supply zone. Price go right down to our equal lows. Okay. All right, you guys, let's go ahead and recap. So remember, with this particular strategy, you can do this pretty much in 5 steps. But first, initially, we want to identify our consolidation. We want to make sure that our fake out, we want to get full candle closures outside of the consolidation. Then from there, we want to see our breakout, which we want to see the same. Number 4 is our retest on our supply and demand entry, and then up to equal highs. Also, one thing to note is structure is key. We still want to maintain structure in whatever time frame that we're trading and we're looking at. So structure always holds true to whatever the market is doing. And so these fake outs and breakouts, things like that can happen in whatever type of structure, but we still want to be mindful of the structure in which we're trading and we're going against. All right. Hey, you guys, I hope this was informative for you, and I'd like to thank you for watching.
We strategize, then we capitalize on what we see. Wanna go to Pittville? Come join the Pip Academy and learn the Pip drill. Let's take the trip to Pittville.